Hello, everybody. Welcome to the Anomaly course, Core Content Lesson 5, Swing Confirmations. So what we are going to be doing is still trading from swing formations. We're going to be adding an extra layer of confirmation to those swing points, and that is going to be SMT divergence. There is a few variants, so let's go ahead and cover them now. So the first variation is going to be SMT between candle 1 and candle 2, where this asset is creating a C2 with SMT. Well, this asset is not the correlated market. And the next variation will be between candle 2 and candle 3. That is where both assets pretty much put in a C2. This asset takes out the C2 and creates basically a new C2 on this asset. Well, this asset creates a C3. Now that we know every SMT variant, now we're going to apply those SMT variants and candle confirmations to universal models. So you're going to see that we're going to be blending universal models, swing points, and SMT. So firstly, let's go over the first stage Kraken correlation when applying it to IRL to ERL. So here we have a one-stage confirmation where you simply have one asset failing to trade into a gap. This gap is created at 11:30. Over here, 11:30's candle gets taken out. As you can see, both assets don't have a gap. Both assets do not need a gap. Only one asset needs a gap. And you can see we have that one stage Kraken correlation, and that can be your confirmation when you get that candle 2 closure. You can target the close proximity ERL. Now let's go over the next variation of SMT, and that is going to be with the candle closure itself, which is called a PSP or precision swing point. And that is essentially when one asset closes bullish while the correlated market closes bearish. This is a form of Kraken correlation because they should both be closing in the same direction, right? They should be closing both bullish, just like markets should be creating the same highs and lows. But when they do not, that is your Kraken correlation and the first hint at a reversal. So now let's go over the second variation of a one-stage Kraken correlation, and that is where both assets hit the key level. So you have no SMT at the key level, so you have to wait for a candle closure, and the candle closure itself is a precision swing point, which is a Kraken correlation. And as you can see here, this candle that hits this previous stage low, which is a gap high on the 11th, is a bearish candle, and this asset also hits the 11th low. So there's no SMT or anything like that, but this candle closes bullish. So that is your confirmation, and you can assume that candle 3 can expand to the ERL. So simply IRL, ERL. So now let's go over a two-stage PSP. This is where we have SMT between the swing formation and a PSP confirming. So as you can see here, we have SMT between candle 1 and candle 2, candle 1 and candle 2. In the close itself of candle 2 is bearish on this asset and bullish on this asset. That's your PSP, which is the second stage Kraken correlation, right? Here's your first stage SMT, candle 1 and candle 2, confirmed by the PSP closure itself for the second stage. Now let's cover two-stage PSP, where you have SMT between candle 2 and candle 3. So this is where you get a PSP closure first, confirmed by SMT, right? So now this is a lot easier to read rather than not having a PSP here, right? You really have that C2 closure, like I said in the previous slides. You're going to get the C2 closure first. One asset's going to sweep it, one asset is not, and that's pretty much how you tell, right? First stage SMT is the candle close itself, or the PSP. The second stage is essentially an SMT with the PSP high itself, or candle 2 and candle 3. Now let's go over a continuation PSP. This is pretty simple. You want to be using this in a continuation, right? Following a reversal with an open draw. So the first step is to create a PSP, as you can see here. And one asset is going to sweep the PSP high, while the other one does not. Essentially, one asset is creating a C2, while the other one is just continuing. And this is what we call a continuation PSP, which is a form of two-stage SMT. Now let's go over my personal favorite two-stage Kraken correlation. And that's where you have an SMT with your key level. You can see this asset is trading to the gap. This is the strongest asset here. It's actually trading above the high. And this asset over here, ES, is not trading to the gap. So kind of like key level SMT with ES and key over here. And then the second stage SMT is confirmed by a PSP. So You're pretty much waiting for a key level SMT and then a candle 2 closure, but the candle 2 closure is a PSP, right? It's just a super easy way to trade, in my opinion, because you have the key level, you have the SMT at the key level, you have your candle 2 closure, and the candle 2 closure PSP. It's super mechanical, super easy. And you can see this candle is bullish, this candle is bearish. That's your second stage cracking correlation, going from IRL to ERL. Now let's go ahead and cover the next two-stage variant, and that is when you have a two-stage PSP out of a key level. So you can see this asset over here is in a gap. This previous candle here is a PSP. As you can see, this one's bullish, this one's bearish, and you can see that we have that cracking correlation between consecutive candles here. So as soon as we run this high into the gap, right, you have that two-stage cracking correlation. You're pretty much good to go from IRL to down here, which is ERL. So now let's go over the first variant of two-stage SMT. So this is where you get your first stage cracking correlation with the gap. As you can see, this asset on the left, the weaker asset, does not trade into that gap, but this asset over here does trade the gap. So there's your first stage SMT. It's just SMT with key level. And then your second stage is swing SMT. As you can see here, takes out that previous high. This asset is not, kind of printing that roof SMT that we want to see. It's a form of a strength switch. And this is a very strong confirmation for confirming your universal model. Now let's go over another variant of two-stage SMT. And this is where both assets hit the key level. You have a two-stage SMT via swing point. So you have SMT between candle 1 and candle 2, as you can see here, right? And then SMT between candle 2 and candle 3, right? So creating consecutive candle SMT in the form of a two-stage cracking correlation. So this can also be used to confirm your universal model. As you can see, this asset's in a gap, IRL, ERL. Now let's go over one of my favorite continuation sequences, and this is using a continuation PSP. Remember, continuation PSP is an expansion. So after price expands away from a reversal, it's going to create a precision swing point. As you can see, this one's bullish, this one's bearish. As long as there's a drawn liquidity open, we are expecting an SMT between that PSP high, where one asset creates a reversal to expansion candle, and another asset just expands away, right? But what you want is that PSP high to be a gap low in a bearish scenario. So notice how this is a 3 candle formation to create a gap, candle 1, candle 2, candle 3. These wicks do not meet. This candle's wick does not meet this candle's wick. That creates the gap. So when you run out to that PSP's high, creating that two-stage PSP for continuation, it's also simultaneously an SMT fill, but it is a two-stage cracking correlation, right? Because you have SMT with the PSP high, but also SMT with the key level. So we know PSP is a cracking correlation itself. The key level is a second cracking correlation, or the candle's high is a second cracking correlation. However you view it, it's a two-stage cracking correlation, right? And it's a very powerful tool to go from IRL to ERL, targeting the previous candle's range and beyond. Now let's go ahead and apply our swing confirmations to universal models. This is what we do, right? We always apply swing formations to universal models. We also apply SMT to our universal models / key levels. So let's go over every single variant that we use and put it all together. So firstly, here's just SMT with our key level, right? SMT with the IRL, looking to target the ERL for a one-stage cracking correlation. Here is another form of one-stage cracking correlation where both assets hit the gap, but the candle close confirming the gap is a PSP, right? On the correlated market, this would be bearish. On this market here, it's bullish. That is the cracking correlation, which is a form of SMT. Now here is the first variant of two-stage SMT. It's where you have SMT with the key level, then you have that candle 2 to candle 3 SMT. Here is the next form of two-stage SMT. It's where you have your first stage SMT between candle 1 and candle 2, and then candle 2 and candle 3, right? Confirming this gap here. Here is the next form of two-stage SMT. That is where your first stage SMT is with the key level itself and confirmed by a PSP closure. And for this example, we have a two-stage PSP, right? No SMT with the key level, but you have a PSP and an SMT with that PSP low, which is your two-stage SMT to confirm that key level. Now let's go over SMT with ERL and IRL. So here's your first stage SMT. It's simply just SMT with the ERL key level itself. This is an example where all assets might reach that ERL objective, but the swing formation confirming it on the close creates a PSP, and that will be your one-stage Kraken correlation. Here is the first two-stage SMT variant, where you have SMT with your key level, followed by candle 2 and candle 3, SMT second stage confirmation. Here is the next two-stage confirmation. We engage with the key level on all assets. We have SMT between candle 1 and candle 2, and then candle 2 and candle 3. Here's the next two-stage variant. You have SMT with your key level, followed by a PSP for your second stage confirmation. And here is the last two-stage confirmation, where PSP is your first stage and SMT with the PSP's high is your second stage confirmation. Now let's go ahead and apply our SMT variants to ERL to IRL. So here is an example of a first stage SMT or a one stage SMT. We have SMT with an external range of liquidity, right? Once that candle closes, you're going to expect price to expand away back into IRL, right? Going from IRL to ERL using SMT as our confirmation. Now here is an example of maybe you don't hit ERL, but you have a reason to go back into the range to target IRL. So what is the reason here? Well, the daily open is right here. Let me mark it out. You have the previous sessions expanding all in one direction. So it's highly likely that this day is going to be capped off at some point. You cannot expand forever. Not every session is going to expand. So you're essentially just waiting for a Kraken correlation to form. And that's where you get your one stage Kraken correlation. There's no key level to the left. Or even if there was a key level to the left, maybe both assets hit it, right? This is where you have no SMT at the key level. You just have a PSP, and that PSP will be used to expand back into the range and target IRL. Now here's an example of using two-stage SMT. We have a first stage SMT with a swing high, followed by the second stage Kraken correlation with your swing formation. And this is a great example of how typically ERL to IRL is going to be counter trend, especially when you have SMT as your first stage with like not relevant highs. You see how this is not a relevant high? This is the relevant high, right? This is the relevant high. And we are very high in premium of that range. So this is likely the overall draw liquidity. So any internal level where you have two-stage SMT, it's probably used as a retracement, right? And you can see that this two-stage SMT is probably going to be short-lived. Where we're going to cap off that retracement at is IRL, right? This little small fair value gap, you can expect the next day to at least hit that fair value gap. And as you can see, we have a PSP here, right? Confirming the gap. And now you know that this two-stage SMT is probably done its job, right? We're probably back on side with the expansion to target that high up there. Now here's an example of using two-stage SMT to confirm our ERL to IRL, where we have our first stage SMT with the key level itself, which is just going to be an external high or low. The second stage SMT is going to be with a PSP, as you guys can see, bearish, bullish. This is a strength switch PSP. So a lot of times where you have this actually reversing the whole range, your first target is simply going to be IRL, right? And then you're going to see how price reacts to this level, right? If this is an actual relevant high, we can totally reverse the whole range, just like so. If you play price forward, we can actually target this whole range, which it ends up turning into manipulation ranges, right? Manipulation of the high, target the lows, right? Especially if, you know, the low of this range is failure swings like this, or the high of the range of being manipulated is relevant, then that adds to the probability that we're probably going to go all the way down here. But this can be your first target, is back into the range, targeting that IRL. Now here is going to be our last example using two-stage SMT, where both assets hit the key level. Here's a swing low, here's a swing low on this asset. And then you have no SMT with that swing low or key level. So you're gonna wait for a PSP, and then you get that two-stage PSP, right? Where the weaker asset runs out the PSP low, the stronger asset does not. And that can be your two-stage confirmation to target back into the range, into this fair value gap. Now let's go over manipulation ranges. Here we have a one-stage Kraken correlation, SMT with your key level. Here is no SMT with the key level, but you get your PSP confirmation as your first stage. Now here's going to be your first variant for two-stage SMT, SMT with your key level, followed by an SMT between candle 2 and candle 3. Here is the next one where we have no SMT with the key level, but SMT between candle 1 and candle 2, and candle 2 and candle 3. Here's our next two-stage variant, SMT with our key level, confirmed by a PSP candle closure for your second stage SMT confirmation. And lastly, no SMT with your key level, first stage SMT with a PSP, second stage SMT confirmation between candle 2 and candle 3. So here's an example of a one-stage Kraken correlation where you simply have SMT with your key level. The key level will be the range high. So SMT with our range high, this asset does not take it out. This asset does. So once we get that candle 2 closure or just reversal signatures in general, we can go ahead and confirm that reversal and target the opposing side of the range. So here's the second variation of a one-stage Kraken correlation. This is where both assets trade into the key level being the range high, the range high. This asset trades way through it, but when this asset breaks that SMT that we once had, is when we get our confirmation, right? So no key level SMT. So what do we wait for? A candle 2 closure in the form of a Kraken correlation, which is a precision swing point. As you can see, this candle's bearish, this one's bullish. We're going to trade that weaker asset into the range low. Here is an example of using our first variation of two-stage SMT, where we have one asset rating the range high, one asset doesn't, and then it's confirmed by swing SMT, ideally in the form of a strength switch like this. And then once that is confirmed, we can go ahead and target opposing lows. Here is an example where both assets hit the key level, but our two-stage SMT comes in the form of a swing formation. We have first stage Kraken correlation between candle 1 and candle 2, second stage Kraken correlation between candle 2 and candle 3. As you can see, this candle expands away. Once this candle closes to confirm the two-stage SMT on that lagging asset, because it has such a large wick, it has to wait for 10 o'clock essentially. And then that asset catches up and starts to also target these opposing lows. Here is, again, my personal favorite two-stage SMT. That's where you have SMT with their key level, confirmed by a C2 candle. That C2 candle is a PSP as your second stage Kraken correlation. In this case, it's a strength switch PSP, again, which is my favorite. And as you can see, price puts in that reversal, and you can expect to expand into the opposing side of the range, completing your universal model. And here is the last two-stage variant where both assets hit the key level, and then it's confirmed by a two-stage PSP. So firstly, it's going to print a PSP, and you're going to see that PSP's high get ran out on one asset, which is the stronger asset. The weakest asset does not run that low out. Then that confirms candle 3's high, and then you can target the opposing side of the range.